A new month and a new set of data points for the markets to absorb this week, including Friday's employment report. Joining us with more on the market, Stephnie Guild, Chief Investment Officer at Robinhood Financial, who you can call me Godot. I'm waiting. Are we ever going to see a deleterious effect on growth from all the uncertainty and all the tariffs? And is it coming this Friday? Is it finally going to be there?
No, I don't think the jobs report is going to be the thing that shows.
Will it ever come then?
Data. I think it depends on how long it takes to understand where the tariffs are. And I think investors need to, just like when you're driving a car and you need to turn down the radio to see better, I think we all need to turn down the noise a little bit. And
I do that.
and really just focus on the two possible scenarios. One is that we have higher tariffs than we have today, and you need to have dry powder and for the volatility. You need to have some low volatility stocks in your portfolio. And then I think the other one is that we do have some tariffs, that's for sure. I don't think those are ever going away. Bissett made that clear yesterday in Face the Nation. But I think there's a possibility that they end up being kind of lower and tolerable.
I thought companies and consumers were already responding by from the uncertainty and being paralyzed. Have we seen anything to indicate that? Give me a number that shows that.
No, I mean, we haven't seen. Obviously, Q1 GDP was a little lower, right?
And that had some weird stuff in it, right?
Even with the weird stuff in it, right? Like it was still a little bit negative. And after that point, you had the pause put in place, and things have come back really strongly. And all those ships that weren't coming started coming.
Wealth effect of the market.
I mean, you don't see a recession yet. Like it just doesn't show it in the numbers yet.
Did you look closely at any of the deficit data that came out on Friday, and why was it cut in half from the prior month? When I thought everybody was going to be stocking up on imported goods prior to the tariffs kicking in.
I mean, I think they did.
Then why was it half of why was it only 80 billion?
Well, I think because they stocked up, and now things are starting to move now. I thought you were talking about the deficit in the government for a second.
No, that's a whole other enchilada. Obviously, no, I just couldn't understand why in a month where you would have thought that suppliers were going to front end load things and get as much as they could.
Like I think they started doing that in March. And I think they're good until
that still wouldn't explain why it goes down in half. I don't know. So are you? You don't have an S&P target, do you?
I do.
For the end of the year.
I've had one for the same one. I haven't been like other strategists.
The same one.
6,200.
6,200. So even when on the week of April 2nd, you didn't change it from 6,200.
I was 6,500 at the start of the year on the low end of all the analysts, and then I moved it down to 6,200, and I've kind of kept it there because I just think you don't know what was going to happen. And oftentimes, President Trump does come out a little stronger than where things settle. And so you really shouldn't be, I think, moving things around. Like I said, you want to turn down the noise and really focus on what is actually happening.
You're not a fixed income analyst necessarily, but it certainly matters, and it informs the other markets.
Of course.
Rates going higher, vigilantes coming around.
Yes.
Is it going to be? They are.
I think we need bond vigilantes around. I mean, as a percentage of GDP, our interest payments are now 3%.
Yeah.
And that was the last time we had bond vigilantes out.
Yeah. And our deficit to GDP is stratospheric. It can't.
Not as high as Japan, but yes, it's
70%,
very high.
Isn't it?
Debt to GDP
deficit.
Or deficit to GDP?
Yeah.
Well, I mean, it's $1.8 trillion today, right? And if you think about how much we spend, like the thing I think we're not dealing with that we need to deal with, 2/3 of what we spend is on Social Security, Medicare, and Medicaid. And that's the part I don't see actually being dealt with. And that is what I think.
You don't see Medicaid? This is not enough with Medicaid? I don't think it's
I mean, there's not much happening in terms of, right? Like there's
really not
additional requirements. But I really feel like we need to reimagine what happens with Social Security. That's the biggest piece of it.
Yeah, that one. But Medicaid, too. I mean, it's become, it's the way that the system works now. It's not what it was intended to do.
No, I mean, it was set up like it.
For disabled,
you don't get to
pregnant
control.
people. Yeah.
We don't even get to control how much the government spends on it. It's all just based on CPI, which is not really.
And all the states get to, they get to game it and get reimbursed in certain ways. All right, these are a lot of. You got to be
biggest financial issue.
So I'm going to be, if I come back in another life, I'm going to be a technical analyst. I'm not going to think about anything but charts and sentiment and flags and Fibonacci and things. I'm not going to think about the government or President Trump or anything. You have to think about all those, don't you, still?
Yeah, I mean, look, I'm running money now. We have a managed portfolio. Bitcoin? I mean, look, Bitcoin is starting to come into the fold. Every single day, there's a new regulation proposed to make it more sustainable and make it something that people can actually invest in across the world. And I do think that there is a future for Bitcoin.